Hi everyone, in this video we're going to talk about Chapter 4, which covers process costing. And the nice thing about Chapter 4 is it builds on a lot of the things we covered in Chapter 3 with regard to our job order costing, just applies them in a slightly different way. So with that in mind, there are some similarities between job order costing and process costing. Both systems assign all of our material, labor, and overhead costs to products, and they also give us a mechanism for coming up with unit product costs. Both systems do use the same manufacturing accounts, so that's our manufacturing overhead, raw materials, work in process, and finished goods. And the flow of costs is basically the same through both of the systems, and we'll definitely highlight the differences as we go. Speaking of differences, if you recall, in job order costing, we were working on a bunch of different jobs each period, and each job had its own unique or different production requirements. If you'll also recall, we were accumulating manufacturing costs by individual job. So we were assigning materials, labor, and overhead costs to each particular job as that job was worked on, and then following the flow of those costs through the production process with that job. And then our third point here on this slide, unit costs were calculated by job on our individual job cost sheet. However, in Chapter 4 in our process costing system, really we're assuming a single product is being made either on some kind of continuous basis or at least for long periods of time. In this particular product, all units are basically identical. So we often think of process costing systems related to things like soda production, Coca-Cola, right? They're making a whole bunch of 2-liter bottles of Coke Zero Sugar. None of those are any different. Things like paint would also be falling under that category, or gallons of paint that you see at Lowe's and Home Depot. Those are made under sort of process costing systems. All of our costs in process costing systems are accumulated by department rather than individual jobs, and then typically we do calculate unit costs by department as well. So processing departments, just generally speaking, are any unit in an organization where some kind of materials, labor, overhead are added to those homogeneous products that we're talking about. The activities that are performed in a particular department are done, again, uniformly on all units of production, and then the output is once again homogeneous or the same. Nothing's really different. There's no customization. Everything's just kind of in that old assembly line mentality where the same things are just rolling off by the hundreds and thousands. Products in a process costing environment typically flow in a sequence from one department to another. There's really almost an infinite number of departments we could have. So for our purposes, we'll just kind of worry about using examples where there are 2 or 3 departments. So the first real learning objective in Chapter 4 was to record the flow of materials, labor, and overhead through a process costing system. And again, the nice thing here is that this is done very similar to the way we did it in Chapter 3 with our job order costing systems. We just have to make some allowances and some different accounting for those different processing departments. So in our job order costing system, if you'll recall, we had materials, labor, and overhead that we applied or assigned to different jobs. And then we traced, again, the cost of those individual jobs through our system through work in process to finished goods and eventually out through cost of goods sold. In our process costing system, we're tracing those same materials, labor, and overhead costs, but we're tracing them through our individual processing departments, through work in process in each department, from department to department, and then eventually to finished goods and out through cost of goods sold. So the intermediate step is really where things differ in a process costing system when we're transferring costs from one department to the next. And we'll see that in some journal entries and T accounts coming up momentarily. So the flow of raw materials costs here, for purposes of this example, let's assume we have just 2 processing departments. That's A and B. So we'll book some journal entries and also look at the flow of those costs in our T accounts. So as in our job order costing, materials are taken from the storeroom using some kind of materials requisition form and or process. Materials can be added in any department and often are added in multiple departments. So here's an example journal entry to issue some raw materials to Department A and to Department B. So we have a debit to work in process for Department A for the direct materials that they're using. We have a debit to work in process for Department B for the direct materials they're using. And then we have a credit to raw materials for the total. It's also important to remind ourselves here that if we have indirect materials being used, those are going to hit a manufacturing overhead account, so we wouldn't be assigning those directly to work in process. If we look at our T accounts, we can kind of visualize what we just did in our journal entries. So again, we were reducing the balance in the raw materials inventory account and increasing the balance in the work in process accounts for both Department A and Department B to signify that costs associated with those materials were being moved from raw materials to those individual departments. We'd have a similar setup for labor. So labor costs are traced again to departments, not to individual jobs. So we may have a journal entry that looks like the following related to some labor costs in our two sample departments here. So again, we're going to debit work in process for Department A and Department B for some amount related to direct labor costs, and then we'll credit salaries and wages payable for that same amount. If we look at our T accounts, we are going to illustrate what we just did with our journal entry. Again, we're increasing salaries and wages payable, indicating that we've incurred some direct labor costs. And we're increasing the work in process accounts for our two processing departments, A and B, by increasing those accounts with a debit. Again, if we're debiting work in process directly, we're indicating that this labor must be direct labor. Our indirect labor, if we think back to Chapter 3, needs to hit the manufacturing overhead account and then be applied subsequently to work in process. Speaking of overhead, in process costing, as in our job order costing system, we do have predetermined overhead rates. So overhead is applied according to the amount of activity that's used in the entire department rather than for individual jobs. So we may have a journal entry that looks something like the following related to overhead costs applied. Again, increasing the work in process accounts for both Department A and Department B, and crediting or quote unquote decreasing the overhead account for the same amount to indicate that we're applying overhead to the work in process in Department A and Department B. Again, exactly the same as we did in Chapter 3 with our job order costing system. The difference, of course, is that now we're applying that to two different departments rather than the work in process single account related to some particular job. If we follow the flow of those costs in our T accounts, somewhat of a refresher for us again. So a credit to the overhead account, again representing overhead that's being applied to work in process, and debiting work in process for Department A and Department B as needed. So again, our overhead account, nothing has changed with that from Chapter 3. Our actual overhead costs incurred still represented with debits to the overhead account. Our overhead applied to work in process are still represented with credits in the overhead account. Remember, at the end of the period, we want to make sure we have no balance in overhead. So we may have under or over applied overhead. We'll still dispose of that the way we did in Chapter 3. So one new thing for us in Chapter 4 with our process costing system is that transfer from work in process between departments. So once processing is finished in a particular department, the units are transferred to the next department and the costs need to follow along with that transfer. So if we think of some scenario where we're making, say, furniture, and we have a sanding department and a painting department, as individual units of furniture are finished in sanding, they're done and ready to paint, we're going to transfer the furniture and all the costs associated with it from the sanding department to the painting department in my example. So we'll have this type of entry to do that, where we see a debit to work in process for Department B in this case, and a credit to work in process for Department A in this case for the same amount. Again, just transferring the costs associated with goods that are moving from one department to the next but still aren't finished. So in my furniture example, that was moving to the painting department as Department B from the sanding department as, say, Department A. And we can, of course, see that in our T accounts. We notice the transfer of a credit from work in process in Department A, and including a debit to the work in process account in Department B. Again, this flow of costs mimics or follows the flow of physical goods in our process. Right? We're moving these pieces of product down the assembly line, so to speak, one department to the next. When we do that, we want to make sure the costs associated with them move as well. Then when things are finished in kind of the last department, the cost of the completed units are transferred to finished goods, similar to the way we did it in Chapter 3. So here in my furniture example, painting was kind of last for the furniture. So we may see a credit to work in process for Department B or painting for some amount, and then a debit to finished goods to represent the cost of those goods that are now completed and ready to be sold. And we'll see that in our T accounts one more time. Again, credit to work in process for that last department that touched the product, and a debit to finished goods for that same amount. If you recall from Chapter 3, our schedule of cost of goods manufactured help us come up with a number for the cost of goods finished or manufactured in the period, and that's what that journal entry is representing. Right? A credit to the work in process for the last department the goods flowed through, and then a debit to finished goods for that same amount. Finally, when the customer's order is filled or we're selling things on a regular basis here, the cost of the units that have been sold is transferred through cost of goods sold so that it hits the income statement. And there's nothing different with this entry than what we're accustomed to. So a debit to cost of goods sold to increase that expense account, and a credit to finished goods to decrease the finished goods inventory account. And just to show that in the T accounts, again, we're following the flow of the cost of those goods from finished goods, where they were done and ready to sell, out through cost of goods sold, where now they have been sold. So our learning objective 2 for Chapter 4 is to compute the equivalent units of production using the weighted average method. And before we do that, we want to talk about just a few key concepts related to our process costing calculations. So in process costing, each department needs to come up with a couple of numbers for financial reporting purposes. So the cost of its ending work in process inventory, that of course would show up on the balance sheet, and then the cost of its completed units that were transferred to the next stage of the production process. So the key to coming up with those numbers is calculating unit costs within each department. So there are two methods for making those calculations: the weighted average method, which we tend to stick more to, and then the FIFO method. The weighted average method calculates unit costs by combining costs and outputs from the current and prior periods, so everything done up to this point, whereas the FIFO method, which is covered in the appendix to this chapter, calculates unit costs based solely on the costs and outputs from the current period, right? First in, first out. So characteristics of the weighted average method. Well, part A here, this method doesn't make a distinction between work done in the prior and current periods, or kind of throw everything together. So it blends units and costs from, again, prior and current periods, things that are still kicking around from any point in the past. Part B, the equivalent units of production are the number of units transferred to the next department or to finished goods. And then we also have to add to that the equivalent units in the department's ending work in process. So we're trying to get an idea with equivalent units of production, how many full units we sort of could have produced in the given period. Our second concept related to this process or set of notions, if you will, is that direct labor costs are often small, related to the other product costs in process cost systems, and in particular manufacturing overhead. And so it's sort of important for us to make sure we delineate between costs that are driven by direct labor and costs that are driven or kind of coming under that manufacturing overhead bucket. So with that in mind, labor and overhead are often combined into one classification of product cost called conversion costs. And we did introduce that term earlier in the semester. So the example here combines these costs. So remember we had direct labor, direct materials, and manufacturing overhead were our three product costs. Labor plus overhead equals conversion. And then while we're here, we can refresh our memory. Direct materials and direct labor, we called those two together our prime cost, right? So conversion costs, another way I like to think of that is what are the costs I incurred to convert, as the name implies, all of my materials into some finished product, right? The labor that I incurred to have people work on those things, and the overhead I incurred to have sort of the process running. Again, equivalent units of production we define officially as the product of the number of partially finished units and the percentage completion of those units. So how many physical units are sitting there or went through the process times the percent complete those units are with respect to something. Usually for us that's with respect to materials and conversion costs separately. So equivalent units need to be calculated because, again, departments usually have some partially completed units in both beginning and ending inventories. It makes the determination of output a little bit more complicated, so equivalent units just give us a more accurate picture of all the work we really did in that department for a given period. Again, it's the equivalent of how many total units or finished units we pushed through that particular department or process in any given period. It also helps us determine the unit cost that should be assigned to that output because we want to do that on a sort of full unit basis rather than trying to assign unit costs on fractional bases. So equivalent units, sort of in equation form, then again is the number of partially completed units we have times that percent completion, and we'll incorporate our fully completed units, and we'll talk about how to do that in a second. So let's assume Department A has 500 units in ending work in process that are 60% complete with respect to processing in that particular department. Those 500 units are equivalent to 300 fully complete units then. So we're saying 500 physical units in ending work in process times the 60% completion rate with respect to processing in Department A means Department A has processed or finished the equivalent of 300 full units. So Department A's ending work in process would contain that 300 equivalent units for the period. And that's how we'd come up with unit costs and assigning costs to those particular units. So let's look at an example of that. So let's assume Smith Company reported the following activity in the assembly department for the month of June. So we had 300 units in beginning work in process. They were 40% complete with respect to materials and 20% complete with respect to conversion. We started 6,000 units into production in June. We completed and transferred out 5,400 units in the same month of June. And so we have a total of 900 physical units in ending work in process. We'll stop there for a second. So that's the 300 we started with, plus the 6,000 we started in the period, minus the 5,400 we finished and transferred, leaves us 900 physical units in ending work in process. Okay. And we also note here that they are 60% complete with respect to materials and 30% complete with respect to conversion. So we start by calculating the equivalent units completed and transferred out. And the good news about that is any unit that's been completed and transferred out must have been completed at 100% completion rate with respect to everything, right? Otherwise, it wouldn't have been marked finished and kind of moved on out of the process. So those 5,400 units from a moment ago that were completed and transferred out of the department in June, we're going to always count those at 100% with respect to both materials and conversion. And that's what we see on the top line here. Units completed and transferred out, 5,400 for materials, 5,400 for conversion. So next we identify the equivalent units of production for the ending work in process. We'll do that first with respect to materials, and then we'll do it for conversion in a minute. So we had 900 units in ending work in process, and we said 2 slides ago that those were 60% finished with respect to materials. So in terms of equivalent units, that's 900 times 60%, or 540 units. So our equivalent units of production in the department during June with respect to materials is 5,940. And that's the 5,400 that were completed and transferred out in June, plus the 540 equivalent units with respect to materials that are sitting in ending work in process at the end of June. So we'll do the same thing for conversion. We've got the 5,400 that were completed and transferred out in June. We've got the 900 physical units that are sitting in ending work in process, and they were only 30% done with respect to conversion costs. So 900 times 30% means 270 equivalent units with respect to conversion. So when we add data to the column, again, we've got the 5,400 units that were finished and transferred out, plus the 270 equivalent units with respect to conversion, means our equivalent units of production in the department for June with respect to conversion are 5,670. And so often equivalent units in total for a particular department for any given month will be different for materials and conversion. Often materials and conversion are not accumulated or incurred at the same rates throughout the month. So oftentimes those are different numbers. Again, we have to have some information about this completion rate in order to come up with this number of equivalent units. So to summarize, equivalent units of production always equals those units we completed and transferred. That should always be our starting point. Again, those are 100% done with respect to everything. There's no need to do any math with those. It's just the physical goods that were finished completely and moved out of the department. And then to that, we always add the ending work in process. And there's where we have to factor in our completion rates. So it's always the goods that were in ending work in process, number of physical goods, times that completion rate, in this case for materials and conversion separately. 60% for materials, 30% for conversion. And then we'll add those numbers up to come up with the equivalent units of production for the department as a whole during any particular month. It may help us to stick a picture to this just to kind of further illustrate the point. So in this example, again, we had a little bit of work in process at the beginning of the period. We had a whole bunch of units that we knew we had completed and transferred out, and then we had some ending work in process that wasn't quite complete with respect to either materials or conversion. So with respect to materials then, here's how we kind of arrive at that 5,400 units completed. We started with 300, we ended with 900, and we knew that we had transferred out 5,400. So we, in essence, had started 5,100 into the production process for the period. Again, our ending work in process of 900 physical units, we're counting those, if you will, at 540 equivalent units, since they were 60% complete with respect to materials. So again, when we add the units completed and transferred out to those ending work in process units, we see that same 5,940 equivalent units of production, again, with respect to materials. So with respect to conversion, that was a little bit different. Again, those beginning work in process units were a different percent complete, but for purposes of equivalent unit calculation, we don't care about that. What we are concerned with are the units that were completed and transferred out. That's always our starting point. Again, 5,400 in this case. And then our ending work in process of 900 physical units that were 30% complete with respect to conversion costs. So those are counted at 270 equivalent units. And when we add those together, there's our 5,670 equivalent units of production with respect to conversion. So learning objective 3 in chapter 4 was to compute the cost per equivalent unit using the same weighted average method. So if you recall from our example here, we had 300 units in beginning work in process. They were 40% complete with respect to materials, 20% complete with respect to conversion, and we're given the costs assigned to those units. So we can't really come up with that number without some additional information in any particular example, either from the previous month's full data set or from just kind of these immediate totals. So we know, in other words, that the materials cost associated with those 300 units is $6,119 in this case, and the conversion costs, which represent labor and overhead, related to those same 300 units is $3,920. We also know from that example that we had started 6,000 units into production during June, and during June we had completed those 5,400 units that were transferred out of the process. We also know, or want to assume in this case, that costs added to production in June for materials were a little over $118,000, and for conversion costs, this $81,130. Again, we need to be given some more information about that, even if it's the separate conversion costs components and something to do with materials cost in terms of materials used. So we need to know what we dumped into the process from a cost standpoint. Just another quick reminder that our ending work in process here is 900 units that were 60% complete with respect to materials and 30% complete with respect to conversion. So to come up with the cost per equivalent unit using the weighted average method, and we do need to do this calculation separately for both materials and conversion here, or whatever our cost categories are. We want to take the cost of the beginning work in process plus the costs that were added to the process during the period, and then divide that by the total equivalent units of production. Again, equivalent units is our measure of how much work did we really complete from a full unit perspective. So that's what we want to use to come up with a full unit cost each period. Here's a little schedule that has our cost and equivalent unit info for this particular problem. So our beginning work in process costs, which we talked about a minute ago, the cost that we added in assembly that we also hit on the previous slide, and then our equivalent units from our earlier discussion of how to calculate those. So in this particular case, we have $124,740 in total materials costs for the period, which represents the materials costs related to beginning work in process, plus the costs that were added during the period in assembly. And our equivalent units of production with respect to materials is that same 5,940 that we discussed just a couple minutes ago. Similar deal for conversion. We have the $39.20 in conversion costs related to the beginning work in process, plus that $81,130 that were added in assembly this particular period, and then our equivalent units with respect to conversion, 5,670. So our final calculation then is total cost within each category, materials and conversion, divided by those total equivalent units of production within each category to get our cost per equivalent unit with respect to materials and conversion separately. So in the case of materials, that comes out to $21. In the case of conversion, that comes out to $15. Again, if we have more than one cost category, and we almost always do, in this case materials and conversion, we want to make sure we calculate those unit costs separately, because they'll almost always have separate equivalent units of production. Okay, so we don't want to just combine costs and combine equivalent units in some way. Make sure we calculate those separately. So again, our cost per unit for materials is $21. Our cost per equivalent unit for conversion was $15. So our total cost per equivalent unit, here's where we can combine them or do combine them, is the 21 plus the 15, or $36. And that's what we'll use to assign costs to units that have been completed and transferred out. And we'll do that in just a moment. So in fact, learning objective 4 was to assign cost to units using the same weighted average method. So a quick reminder here, our equivalent units in ending work in process with respect to materials was 540. With respect to conversion was 270. So we'll assign cost to ending work in process for those two cost categories separately. In order to do that, we just want to use our cost per equivalent unit that we calculated a moment ago. So for materials, again, that was $21. For conversion, $15. And when we do that multiplication, we get our cost of ending work in process with respect to materials of $11,340, and with respect to conversion of $4,050. And that's what we'd expect, right? A much lower number in conversion because those equivalent units were so much lower. Those ending work in process units were only 30% complete with respect to conversion and 60% complete with respect to materials. So all else equal, we would expect a much lower cost associated with conversion, associated with that ending work in process. So if we add those together, we get $15,390, and this is what we'd see in our balance sheet under work in process. So now to compute the cost of units transferred out, think back for just a moment, and our units transferred out in this particular example were 5,400. And again, the reason those are counted the same way with respect to both materials and conversion is because any unit that's been completed and transferred out is 100% complete with respect to everything, regardless of what our cost categories are. Right? Otherwise, we wouldn't be transferring out if it wasn't done, in other words. So to assign those costs, we can do it separately for each cost category, materials and conversion, by taking those units transferred times the cost per equivalent unit with respect to both materials and conversion. We also could do this together with the total unit costs, since the equivalent units are the exact same. But here we do it separately just to kind of illustrate the point. So when we do that multiplication out, we end up with a little over $113,000 in materials cost and $81,000 in conversion costs, or a total of $194,400 costs of those units that have been transferred out. So somewhere in our journal entries and our T accounts, we would see $194,400 moving from the work in process account in the assembly department to the work in process account for our next department, or to finished goods if those things were ultimately completely done after they'd been assembled. Okay, so somewhere we'd see this flow of costs out of assembly and into somewhere else. Our last piece here, learning objective 5, is to prepare a cost reconciliation report, again using the weighted average method. The first thing we want to do is figure out our costs to be accounted for. So in that particular subtotal, we have the cost of beginning work in process, so the cost associated things that weren't finished at the beginning of the period, we're still sitting in WIP. And we have to account for the costs that were added to production during the period. So in this example, we had a little bit kicking around at beginning work in process, and then we dumped almost $200,000 into the process during the period. So our total cost to be accounted for was $209,790. That becomes our starting point for this reconciliation. So we want to make sure that our costs accounted for end up hitting that same amount. Our costs accounted for are always the cost of our ending work in process plus the cost of those units that were completed and transferred out. So these numbers we came up with a few minutes ago. The cost of the ending work in process, again, those units that still aren't done at the end of the current period, which was $15,390, and then the cost of units transferred out, which, if you may recall, was 5,400 total units. So we had factored that by the total unit cost or the unit cost for materials and conversion separately. Either way, we came up with the same number of 194,400. So when we add those costs together, we get the same 209,790 equal to our total cost to be accounted for. And again, this reconciliation, we're just trying to tie out those two numbers there. So the total cost to be accounted for, which is just everything we started with, plus what we added to the process during the period, should equal what we have left over, plus the cost of the units we transferred out. Okay, so we're just trying to match our inputs and our outputs here. What do we start with and dump into the process? Let's make sure that equals what we got rid of and then what we still have left over at the end of the period. In this case, we tie out. In every case, we should. And that concludes our discussion of Chapter 4. Thank you.